Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, today's video going to talk about a couple things in one. So, two wrapped up in one here. First off, what I like to do and how I essentially view the beginning of earnings season is a maybe like a barometer of action, right? Kind of like a measuring stick, or maybe like an early look at what not only numbers look like, but responses look like, right? And I really place a lot of emphasis on uh, like the early movers in the quarter. We haven't had necessarily like a broad batch of earnings just yet, but with tech being like the notable exception at this point, tech and actually energy. But within the next 24 hours, we're going to get two key reports from both of those, right? Netflix tonight, Schlumberger tomorrow morning. So, after tomorrow early morning during the day, we're going to get a pretty good idea of uh, you know, first look at tech, first look at energy. We've already had a ton of financials. We've had a ton of retail. We've had a ton of healthcare, bios, pharma, HMOs. So it's at the point of the quarter. Oh, industrials too. We've had a bunch of industrials now as well. So it's at the point of the quarter where I really like to start, looking at the responses, looking at the numbers, and then trying to draw some conclusions and maybe help me form the bias of my trades going forward. And one of like the emerging themes right now, at least one of like the bigger ones, at least this week, is buying bad news, right? And maybe December made things oversold enough, or maybe cheap enough where people are just interested in buying regardless of earnings or forecast. And I feel like the banks have really highlighted this week. City, mixed number, right? Wasn't anything special. I mean, it wasn't awful. Wasn't fantastic. But look at the response, right? I mean, just three really strong days. A big red to green reversal, and then two strong days after that. J.P. Morgan missed across the board, right? Red to green reversal, and now two sessions up in a row. I mean, Bank of America beat, right? Goldman Sachs beat. Wells Fargo wasn't anything special. That's bouncing back. Morgan Stanley is down today, but I mean that one rallied in sympathy, right? BlackRock missed top and bottom line, and that was up almost 20 points at one point yesterday. So emerging theme, right? Buying regardless of the news. Taiwan Semi. So I don't know if you guys are familiar with this. This is a big chip name, one of the top weights in the SMH, second largest weight in the SMH. They had a pretty downbeat forecast. Inventories inventories expanding. Revenue is going to be flat for the year. They talked about still pressure in high end smartphones, in crypto mining. Right, it's a chip stock, so processors for those things. Stock open red. What happened? Push green. Right. So they're buying back. They're buying into bad reports, right? And it's a theme that you've seen this week, and obviously the market being really strong, really resilient, grinding higher has a lot to do with that. PPG, right? So the number for the quarter was okay. They beat top line, they missed. They beat bottom line, they missed top line. The guidance was pretty ugly. Last quarter, ugly guidance, tank the stock, right? This quarter, ugly guidance. The stock is up $4 or $5. Sherman Williams, the stock had horrendous guidance a couple days ago. Gap down. What's happening? Coming right back up. So you're sensing a theme playing out, right? So you know, as much as like I feel like some of these numbers may end up being bad or weak guidance, you have to respect what the market's telling you, and it's that downside at least temporarily. So if the market starts to pull back or roll over, and volatility starts to expand again, then maybe you start to see things wash out again on the downside. But for right now, you have to be a little bit more cautious pushing bets on the downside because bad news, if not priced in, is look buy. It seems that buyers are viewing it as an opportunity to go long, right? Step in and buy. also, right? So what you've noticed is people that have warned still talk about weakness in China, right? That's a problem. So people that have exposure to China, so PPG. Uh, Also, housing, right? So PPG warned about housing, residential real estate, right? That's why you saw Home Depot and Lowe's, which are both getting hit today. So real estate still tough. That's a that's an area where you have to be a little bit cautious. It seems like still. Healthcare has been fantastic on the opposite side, right? UNH this week. Let me get rid of this. So not only was the J.P. Morgan conference a bonanza for M&A and for bios, right? You had some big deals, you had some good numbers, but now the final piece of the puzzle was like the big insurance names, right? Like UNH this week, really solid. BDX, really solid report. That's a large med tech name, right? ISRG, really solid. Illumina, solid. So you have like really solid healthcare reports, right? So going forward, if you find like decent setups, decent bullish setups, you're probably looking at bullish trades on healthcare names. Retail been real tough, right? Macy's disaster, Nordstrom hit, Kohl's hit, Target, even though they technically beat, they got hit. So right now, I mean Lulu up, yes, but Lulu was one of the exceptions, not the definitely not the rule, right? So retail, it's a tough place to be. So short setups with retail, one of the few areas where bad news is still getting punished, right? So there still seems to be downside in retail. You have names that are still getting hit, names that are down a lot, right? That are still getting hit on bad news. So whereas healthcare you're probably looking bullish setups, retail you're probably looking at bearish setups. So that's what you have emerging trends so far, right? And that's why I say after tonight you'll have Netflix, and tomorrow you'll have Schlumberger. So we'll kind of get an early read on tech, Fang, and then energy, and then we can kind of start to make some you know they're broad conclusions off like a small sample size, but they still kind of help formulate opinions and biases, and maybe kind of give you like an early look, or like an early idea of which way you want to lean in certain areas, right? Okay, so that's that. The next thing I want to talk about is relative weakness, right? So I did a video last week, I believe, talking about relative strength. So when you had the huge washout in December and then the big bounce back, right? What happened was is that it allowed you to find the relative strength easily. Okay, and what I meant by that is like when you had the big move down, the big and like the small, it was back in here, and like the bounce back up, then you could see which companies or which stocks snapped back harder, which stocks were above moving averages, right? Which stocks couldn't get back above moving averages, which stocks were stuck around their 52-week lows. So it was really easy to spot relative strength after you had this major move down and then a small bounce, right? You got to see like when they had that small bounce, which stocks reacted better, which stocks had more buying interest, which stocks reset above key levels. Now we followed through on it, right? And with the SPY pushing it into the 50, with the Qs pushing it into the 50, right? Right, they're just at the 50 right here. Let me get rid of this. Now, now you're starting to look at relative weakness. So ideally, you'd get a little bit of a pullback, and then that'd be easier. But still, like when you have such like a drastic move down, a drastic rally back up, now you can start to see what stocks are stuck, right? Which stocks are stuck near the low? Which stocks are stuck near under moving averages? Which sectors, right? So you can use the 50-day for the Qs and the 50-day for the S&P. So SPY is kind of a gauge, right? So which sectors are above their 50 days? Which sectors are still significantly below their 50-day, right? And now you're taking a look and you're trying to find what's lagging, because basically the way it works is when things are lagging in a big move up, those are typically the names that will be the first ones to roll over once we finally pull back, right? So just quick glance here. There's a lot of stuff that have bounced, and there's a lot of so XLK right right underneath that 50-day, but still kind of lagging a bit, right? So while you have Qs above XLK, I mean that's definitely has a lot to do with Apple, which you don't need me to point it out. I mean Apple's definitely lagging, right? But XLK lagging a little bit. Some of these big tech names, Apple definitely specifically here is lagging. Transports IYT, right? Significant gap between its 50-day lagging. Staples, right? This one, people were hiding out in Staples during a lot of like the market weakness in October and November, and then December it's just the floodgates open and it fell apart. And now you can see this is lagging substantially. I mean, the 50-day is significantly higher, and the Staples, if we do pull back, even though they are a little bit of a defensive play, this could be an area because it really was not able to reset above any key support levels, right? Not able to reclaim that this could be susceptible to something now more correlated to the market, right? So it's been lagging, and then obviously like these are just sectors, but then you can go into stock specific, right? So within the sector, so going back to tech, like I was saying, right? So you have tech, but you can obviously see that for Amazon, right? Amazon's well above its 50-day versus Apple, right, which is significantly below its 50-day. So you can use the overall market, the SPY, the Qs, and then try to focus on sectors that are lagging, and then within the sectors, then you can focus on individual stocks that are lagging. But really, you'll see this much more clearly when we have our first pullback, because then you'll see which stocks roll over quickest, right? And then that'll really highlight the relative weakness. But even as it stands right now, I mean, like this 2-3 week fantastic rally is really starting to show you which names are lagging, and for short trades, like those are the ones you want to focus on, because as the logic goes, things that lag in a strong tape are the first ones down in a weak tape. Cool. So, programming note here. Monday, the markets are closed for MLK holiday. So the coaching session will be the following Monday. So that would be the 28th of January. Just the markets are closed, so we're not going to host that. You guys can enjoy the long weekend. So the coaching session will be on the 28th, not the 21st, not this Monday. Yeah, so again, just earnings season is just getting going here, so there's going to be a ton coming down the pipe. And like I said in the video, I really place a lot of emphasis on these early reports because they kind of help me form opinions, biases, different trade ideas based off the early action. So even though I'm not going to be in Netflix tonight, it's definitely important because it'll help me, maybe formulate some trades for next week, because then tech really starts to pick up the next 2 weeks. So it'll be super important. If you are playing Netflix, though, best of luck. And I'm expecting a pretty wild after-hours session, so keep an eye out for that. So have a great night, guys, and I'll talk to you tomorrow.